If you're looking for a company with impressive top-line growth, then Cloudflare fits the bill. Its revenue grew from 85 million back in 2016 to almost 1.1 billion for the last 12 months. That's an impressive annual growth of about 50%. The company is a content delivery network which provides some of the plumbing behind the internet. When you visit a website that uses Cloudflare, your computer talks to Cloudflare's servers first, which then talks to the website servers. This helps to make websites load faster and also helps to protect your computer from malware and other threats. The significance of Cloudflare can be seen whenever the service goes down, as it takes many of the world's largest websites with it. Today, the company has a market cap of $16.6 billion with $1.4 billion of long-term debt and $256 million of cash. That gives the company an enterprise value of $17.7 billion. Revenue over the last 12 months was $1.1 billion and free cash flow was $59 million, but net income was negative $190 million. Part of that loss stems from significant stock-based compensation, which comes in at $226 million. But it's also due to Cloudflare continuing to spend on research and development and sales and marketing. All this means that the company is valued at an incredibly steep 16 times revenue or 300 times free cash flow. However, as Cloudflare grows, these multiples will come down, and management believes it can hit $5 billion in revenues by the end of 2027. Management also thinks it can reduce sales and marketing expenses by 14% over the next few years, and SG&A costs by 3%, and by doing so get to 20% operating margins from just 7% today. Let's assume that Cloudflare can hit $5 billion in revenue by 2028 with a 20% operating margin. That would put operating income at around $1 billion. A 30 times multiple puts the valuation at $30 billion in 5 years' time, which works out to an investment return of 11% per year. So as you can see, a great deal of growth is already baked into the share price. That said, Cloudflare is investing in new products, and revenue should be supported by the current boom in artificial intelligence. On the latest earnings call, CEO Matthew Prince said revenue that's coming from AI companies have substantial growth north of 20% quarter over quarter. In truth, Cloudflare seems like the kind of business you'd want to own, but the valuation doesn't leave much room for error, and there are some big players in this space such as Google, Amazon and Fastly. I think it's worth keeping an eye on this company, and due to its impressive growth, I'm going to give it a cautious bullish rating. But these are my personal opinions, not financial advice, and I've got no position in the stock. For more detailed analysis, make sure to visit our website overlookedalpha.com.